Your entire retirement savings could vanish in a single market crash. Yet Coca-Cola has paid increasing dividends for 62 consecutive years through wars, depressions, and dot-com bubbles. You might think such consistency is impossible in a world of volatile tech startups, but the blueprints for these immortal empires are hidden in plain sight. I analyzed the last century of ledger data to uncover the secret, and the final company I'm going to share. It has been paying dividends since before the American Civil War, and the way they managed to stay afloat during the Great Depression is a lesson every investor needs to learn. So sit back, grab a cup of coffee, and let us get to it. We start with the concept of the dividend aristocrat, but we are going much further back than the usual 25-year requirement. We are looking for the Century Club. These are the battle-hardened veterans of the stock market that have survived world wars, pandemics, and financial crashes while still ensuring their investors get their cut. Take, for example, Stanley Black and Decker. You probably have one of their tools in your garage right now. They have been paying a dividend since 1876. Think about what the world looked like in 1876. The telephone was just being patented. There were no credit cards, no internet, and barely any electricity in homes. Yet, this company found a way to remain profitable through every single decade since. They grew by acquisition, sure, but the core business of providing essential hardware has remained constant. This gives you your first actionable rule for long-term investing. Look for companies that provide the nuts and bolts of civilization. When the economy is booming, people buy tools for new construction. When the economy is failing, people buy tools to fix what they already have. It is a hedge against human psychology itself. Now, let us level up to companies that have truly stood the test of time and look at the financial institutions that weathered the storm of the 1930s. If you look at the history of banking in the United States, most institutions did not make it through the financial collapse of 1929. Yet, companies like York Water Company have been paying dividends since 1816. That is over 200 years. Take a second to let that sink in. They have been paying dividends since before the presidency of James Monroe. It is arguably the longest record of continuous dividend payments in the entire North American market. How is this even possible for a small local utility? It is simple. Everyone needs water. Regardless of the stock market price, the interest rates, or the political situation, people are going to turn on their faucets. Utility companies act as a natural monopoly, which provides a level of stability that few other sectors can match. But there is a trap here. Stability can sometimes lead to stagnation. Many investors get bored with utility stocks because they do not see the massive growth of a tech company. But growth is not the point. Preservation is the point. If you are looking for long-term compounding, utility stocks that have survived centuries are the backbone of your strategy. If you are finding this breakdown of long-term history helpful, please hit subscribe. I am putting together a deep dive on how to spot the next generation of century-long payers, and you won't want to miss that. Now, let us move to the big one, the one I have been saving for you. We have to talk about the consumer giants that have mastered the art of brand loyalty for over a century. Procter and Gamble. They have been paying dividends since 1890. This is the ultimate example of why a diversified portfolio beats a volatile one. You are not betting on a single tool or a single city's water supply. You're betting on the fundamental needs of a global population. Think about the products they own: detergents, soaps, personal care items. These are products people refuse to cut from their budget even when their income drops. During the 1998 financial crisis, during the 2008 housing collapse, and even during the 2020 pandemic, these companies continue to churn out profits. Why? Because brand loyalty is a moat. When you have spent 100 years convincing a customer that your toothpaste is the best, they stop comparing your price to the store brand. They just buy your product. That behavioral shift is what creates the cash flow necessary to pay dividends for an entire century. There is no magic formula here. It is the boring, slow, and steady accumulation of profit that compounds over decades. When you look at companies that have paid dividends for over 100 years, you realize they all share three specific traits. First, they provide a product that is practically impossible to live without. Second, they operate in industries where they have a significant advantage over potential newcomers. Third, they manage their balance sheets with extreme conservatism. They do not chase trends. They do not try to reinvent the wheel. They focus on what they do best, and they do it better than everyone else for 100 years straight. There is a quiet beauty to this kind of investing. While everyone else is checking their phone every 5 minutes to see if a stock price moved by 2%, you can hold a company like this for decades and simply collect your checks. You start to see that the greatest risk in the market is not volatility, but the desire to overcomplicate your strategy. The evidence is clear. A study by the Wharton School of the University of Pennsylvania found that portfolios focusing on consistent dividend growth actually outperform the broader market in terms of risk adjusted returns over 30-year periods. That is a long time. It is the difference between a young professional just starting their career and someone nearing retirement. When you prioritize consistency over explosive growth, you aren't just investing. You are building a system that works while you sleep. So, where do you go from here? You do not need to hunt for the next unicorn startup. You need to look for the dull, boring, essential businesses that have already proven they can survive a century of chaos. Look for companies in consumer staples, water utilities, and basic hardware tools. These sectors aren't flashy, but they don't have to be. They have something better than flash. They have longevity. Once you see the power of that, you can't unsee it. Every time you buy a product from a long standing company, you are reminded that the best businesses are the ones that simply refuse to go away. I want you to remember that your goal is not to win the stock market lottery in a single year. Your goal is to own assets that provide value to the world in a way that keeps the doors open, no matter what is happening in the news cycle. By focusing on companies that have paid dividends for a century, you align yourself with the winners of history. You don't have to guess if they will survive because they already have. So you have seen how the oldest companies in the market turn survival into a science. You know the importance of focusing on essential goods and the strength of a 100-year brand reputation. If this video helped you think differently about your own portfolio, please like it and share it with someone you know who spends too much time worrying about the daily market charts. And make sure to hit that subscribe button for the next session, where we are going to look at why some companies stop paying dividends and how you can spot the warning signs before the check ever stops coming. Thank you for watching. You are already on the right track.